We'll call the meeting to order and open our meeting with a prayer. Our most gracious Heavenly Father, thank you for the blessings that you have bestowed on me. Help the information received here tonight be for the good of Marion County. For the baby Christ's sake, amen.
Amen.
Freedom of Information announcement. In accordance with the South Carolina Code of Laws 1976 as amended, the Marion Star Mothers Enterprise has been notified of the date, time, place, and agenda of this meeting. Item 4, approval of the minutes for August 13th.
So moved. Second.
Motion second, any discussion? All in favor of the motion signify by saying aye.
Aye.
Opposed likewise, the ayes have it. Resolutions.
I'm not aware of anything we have. I know we have a few pending, which I still don't have anything on, but I'm not sure that we have anything new. I haven't heard anything.
All right. Item 6, ordinance.
Thank you, Mr. Chairman, members of council. We have a couple of items here. Item A is actually on hold. That third reading needs to be on hold for the public hearing, which is going to be at the next meeting, I believe. Sabrina, isn't that right?
Yes, correct.
Okay. So item B, this is second reading of ordinance 2024-12, an ordinance authorizing determination and repeal of the current Marion County Personnel Policies and Procedures Manual adopted under ordinance 2018-12 on September 11th, 2018, and all amendments thereafter, and formally acknowledging from this date forward, the county administrator shall be responsible for the administration of county personnel policies. You have a full copy of that ordinance in front of you. We just need to take action on second reading, please.
So moved. Second.
Motion second, discussion. All in favor of the motion signify by saying aye.
Aye.
Opposed likewise, the ayes have it.
Item C, second reading of ordinance 2024-13, an ordinance authorizing the execution and delivery of the first amended and restated special source revenue credit agreement by and among Marion County, South Carolina, and Project Maui, providing for the issuance of special source revenue credits and other matters related thereto. You've had a full copy of that ordinance since first reading. You just take action on second reading, please.
So moved. Second.
Motion second, discussion. All in favor of the motion signify by saying aye.
Aye.
Opposed likewise, the ayes have it. Item 7, committee reports. Ms. Davis, committee number 1, have anything?
No, sir.
Mr. Tenney, anything for committee 2?
Nothing at this time, sure.
Legal update.
It is quiet in this department.
Well, that gets us down to the good news. Brenda Jackson, Kenneth Cobb.
It's kind of putting pressure on me.
I don't think that'll work.
Yeah.
Been tried before.
Yeah. First of all, let me take this opportunity to thank council for the opportunity to serve as your auditor once again. I want to thank Ms. Watford, Ms. DeBose for their patience and assistance that they provided on this audit. It definitely was not an easy year, but we made it through it finally. As you will see in the management letter that you have and some of the findings we'll discuss, we did have some issues this year, which we'll get into those. Just as a refresher about your financial statements that you have the basic management's discussion and analysis, which is a good summary of everything and has some comments in it that management wrote. You have your basic financial statements, which are very summarized. Basically, you'll have all of the whole county combined into one statement. And then you'll have some required information, and then you'll have supplemental information, and that's toward the back. That's where you'll see your details. Like you can see each individual grant that the county received, and then details for the general fund for each individual department. We'll probably look at mainly the summary and possibly the general fund. I'll hit the highlights, but if you have any questions, don't hesitate to stop me and ask any questions that you have. I'll start out on page 5.
You got a question?
No, she asked.
Yeah, I hadn't really started on anything. I was just kind of giving an overview.
Page 5.
Page 5. Okay, this is your independent auditor's report. And once again, this year, you received unmodified opinions, which are clean opinions on everything except your component units. We did have a disclaimer of opinion, which means we did not express an opinion on those because we did not have the library again. They are what's called a component unit, as we talked about last year, and they have their own audit. When we were wrapping up these statements, Ms. Watford checked with them and they had not completed their audit as of yet. So we did not want to wait on them to complete their audit.
I thought we had something from the library.
That was the previous years. That was 2018 through 22, but we needed still 23.
But I think they had told you that they would have it probably it was gonna be like a few weeks after we were gonna be finished.
Yeah.
They should be finishing up now if their timeline.
And I can check with them.
So we don't have it,
No, we don't have it for 2023.
23.
Because this
And
is a
it's-
2022, 2023
Three, yeah.
audit.
Can we follow for that?
Yes, sir.
And it's required to be part of your audit because of them, they're not their own self-supporting entity because the county provides so much of their support. I mean, you provide over $600,000 to them. And that is the bulk of their income that they have. So that's why they should be a part of your audit, or not your audit, of your financial statements. So once again, you have that, and if they can get back on their schedule and have their audits timely, hopefully they'll be in there next year.
And Ms. Waffle, will we see the audit, county council?
We can't, yes, sir. Their audit is public, just like ours is.
Okay.
Because of the change in director, and I believe they changed their auditor. They've been behind in their audits.
Yeah,
So
if I'm remembering correctly, last year when this first started, something happened with their finance person
yeah,
and then their
Director.
computer system, and they had to completely rebuild their entire financial records. And I think the finance person had to come back and help them.
yeah. And what they
Review.
provided me, we hadn't had in previous years, which were the previous audits provided to council. So I do have copies of the previous years because we didn't have copies of those. We are just still waiting on them to complete. And they may be done, like you said, now, the 2023 audit.
Thank you.
So Ms. Waffle, who holds them accountable for what
Their
they're supposed to be
board.
doing?
It's their board, and the board is appointed by council.
The council.
But I mean, definitely y'all should be receiving a copy of it to review and as oversight, since you do provide so much of their funding. Okay. Now let's take a look at some of the numbers that you have in the statement, and we'll flip over to page 17. Now this is a statement, what you would probably, statement of net position, what you would call a balance sheet. This is for the county as a whole. Your first line there is cash at 3.8 million. And you also have a little farther down, you'll see restricted cash, which is at 18.2 million. Now that cash is down about 2.3 million from the prior year. Now, you'll see the bulk of that cash is restricted, and that's just what it sounds like. And you'll see that restricted cash is about 6 or 8 lines down, 18,227,746.99. And that restricted cash is just what it sounds like. That's money that the county has, but that is earmarked for specific projects, such as your ARP funds, any grants that you have that have to be spent on specific things, your local option sales tax fund that can only be used to roll back taxes to the property tax, to your citizens for property taxes. And also it includes the capital projects funds, the funds that you've collected from the sales tax funds to be used to repay the debt for the capital sales tax projects, and the money that you have to fund the capital projects, sales tax projects. So that's what makes it the majority of the 18.2 million. You also have in there your total assets come to 65,881,000. You also see now that number includes your fixed assets. That includes your land, your buildings, all the vehicles and the equipment, net of depreciation. And that accounts for $37 million for the county. Now, this statement is more of a long-term view because it does include those fixed assets. And as you'll go further down, we'll take a look at the liabilities. Now, we talked about that cash that accounted for about 22 million. Now, the county is a flow through for a lot of entities, the school district, the cities, which are the bulk of them, even some of the library, Trinity, and so forth. So a lot of that money that you have maybe, flowing through. So at June 30th, you owe some of that money to these other entities. So I wanted to point that out. In the middle of the page where you see liabilities, about 3 lines under that, it says due to other governments and agencies. You'll see a line item that says was 2,769,000. So you kind of take that into account that, and I see that concern on your face. It was 3 million the prior year. So it's down a little bit. So it's not an unusual number. And that basically is made of the money for your school districts that you owe them because all the taxes are collected here, and then they have to be allocated and then distributed to the cities and to the school district. So when you look at that, that was 1.5 million. That was taxes that are collected that have to be distributed out to those other entities. You had some money that was collected that had to be for the fire department fees that had to be paid out to the fire departments. And then state fines, the fines that were paid and collected, for every fine, assessment, so forth that's paid, a portion of that has to go out to the state. So you have that's in your bank account periodically, and then at the end of the month, it has to be paid out to the state.
And that money is in what department?
It's in that line item D2.
Okay.
That 2.7 million. I'm just trying to give you an idea of what makes up that amount so that you can get a feel for what how the cash works. And so that just because, you see, okay, well, I've got 3.7 million in regular cash. Well, yeah, but some of that's flowing through to somebody else. You also have, you'll see there about 2 lines under that, revenue received in advance, or what we used to call deferred revenue. That's money that you've received for a grant, for the ARP money. You've already received it, but it has to be used on a specific item or a specific project. So that totaled 6,289,000. Now that consists largely of the ARP money. That was almost 3 million at June 30th, 23. Your local option sales tax money, because that has to be used to roll back taxes for your citizens. You had a $500,000 state award that had to be used for the animal shelter. You had some money for RDA funds, or rural development funds, utility tax credit that's been accumulating over the years that has to be used for economic development projects. So all of those kind of things are used. And then some of your grants, you may get those up front and have to hold them until you actually spend them, and then they're deferred revenue. Now, the next section is your long-term debt. Your long-term debt section there totaled 44.5 million. Now, that includes the pension obligation. Now, we've talked about this in all the other years that I've been here. That is the portion of the state's retirement obligation. All the municipalities, everybody that participates in the state retirement system and police officer retirement system is required to recognize a portion of that liability. It's based on your contributions in percentage wise to the total contributions of the whole state or everybody that participates. So your portion of that liability was 16,800,000. So that's a big chunk of that 44.5 million. You also have, and that's the Governmental Accounting Standards Board's requirement. You also have net OPEB obligation. That is other post-employment benefits. That's where you pay health insurance for your retirees. You have an actuarial calculation performed by an actuary to calculate what that obligation is based on all your current people who are retired and receiving benefits, and also based on your current staff when they'll retire and what kind of benefits they would likely have. That accounted for 14.8 million. So you're looking at 2030, probably 32 million of that debt just with those two numbers. And those numbers do fluctuate based on those actuarial calculations, based on what the discount rate is that they use and the interest rate and the other calculations that they make. I'm not an actuary. I can't explain all of those little calculations that they do, but just looking at this year compared to last year, your pension obligation went up 3 million, but your OPEB obligation went down 6.7 million. So I'm seeing big swings in these. I know the OPEB obligation, they said it was because of the discount rate that they used. So anytime we're seeing changes in interest rates, we're going to see changes in these obligations. Now, you have notes to the financial statements in here, and they provide, I'm not going to flip to them, but they start on page 33. There's detail in here on every piece of debt that the county has and on these pensions and OPEB obligations. So you can see what debt the county owes, when it's scheduled to be paid out, and what you're paying on it each year, if you are interested in reading up on that. When you take all of this into account, your assets, your liabilities, and net those together, you get your net position, your net equity. And at June 30th, 2023, that was 7,482,000. So even with the recognizing those liabilities, you're still at a positive of 7.5 million. Some smaller entities that don't have a tremendous amount of fixed assets end up in the negative, showing up these pension and OPEB obligations. Any questions on anything in this page? If not, let's turn to page 19. Now, this is some of the same numbers. This is the balance sheet, but this is on the modified accrual basis of accounting. This is more of a short-term view. It doesn't include the fixed assets and it doesn't include the long-term debt. The main thing I want to concentrate on here is just talking about your fund balances, which is the equity of the county without the long-term debt and without the fixed assets. Now, I want to point out the fund balance here of the general fund is the first column, the next to the last number at the bottom of the page is 1,988,000. Now, just let me stress that fund balance is not cash. Fund
Is what?
is not cash,
Fund balance.
because your cash number, that's a pretty good fund balance. But I do realize that sometimes you have some cash flow issues. So I just want to point out that just because you're showing that fund balance number doesn't mean that you're not going to have some cash flow issues. One issue that a lot of governments may have is cash flow revenues or expenses tend to be like this. They're more even because you got a lot of fixed costs, your utilities, your payroll. Those are fairly constant. Revenues are not always constant. You're going along, your business licenses are coming in usually in a small time frame. Property taxes are coming in a small time frame. So you can have those ups and downs in that cash flow. And fund balance is when you take into account your cash, everything that you're owed and everything that you owe. So it's a combination of all of that. So just keep that in mind, that a fund balance number and a cash number is not the same thing. Just because you say you got 1.9 million in fund balance, you can still have cash issues. I don't want to get, Mr. Bose gets mad at me when I talk too much about fund balance and not cash, so.
But now, can I ask a question, Mr. Chairman?
Sure.
Is this the fund balance that we're talking about every year? Did you give us an update? It shows how many days of
Yes.
expenditures we have,
Mhm.
and what is it, 60 days or?
You should have anywhere from 1.5 to 3 months. And right now, and you're jumping ahead of me.
Oh, I thought I remember that one.
I'm not picking at you. That was my next page. This year, your average expenditures are 67,970. This gives you approximately 29 days working capital. I've got on my sheet here back to 2017. You started at 39 days then. The low point was in 22, which was 15 days. So then you went up to 27 days and then 29 days now. So, and I did
And the second part of that is when you're balancing a budget, we gotta have revenues from some area, and even though you say it's not cash, it's permissible for us to use money that we take out of the fund balance to balance the budget sometimes. I know it's not a good principle. So even though we say we don't have the funds in there,
the only problem is when you're getting lower like this and you're having cash flow issues, when you're doing that, it's just gonna make those cash flow issues worse.
Yep.
Because you don't have that cushion. And that has been the policy, over the last several years, well, maybe not last several, but I was doing some, did a spreadsheet looking back at the last 6, 8 years of where the fund balance was and what happened each year. And, there was lots of years where you did budget to use your fund balance.
And the reason I make that clear, we have to have a balanced budget by law.
Mhm.
So we couldn't, if we didn't have that fund balance there sometimes to help get us through a period where we had to make decisions. We wouldn't be able to make those decisions.
Yeah, I mean, there's two options. You raise revenue or you cut expenditures.
Yeah.
I mean, that's the options that you have. But just keep that in mind that if you're using fund balance, you've also got to have the cash to back it up.
Simple, isn't it?
Yeah.
Yeah.
Ain't none.
And with your, I mean, you're only at 30 days now. So you're on the low end. So you don't really have that cushion to be taken from.
So you're saying we shouldn't be spending a lot of money.
You shouldn't be going into fund balance, I would advise. I mean, because the general fund has to support everything else. Most of your grants don't pay you ahead of time. Most grants make you pay stuff and then request reimbursement for it. So, I mean, you could have to pay for $100,000 for a project and then go out and request reimbursement for it, but you gotta have the cash to do it. Or it could just be, 5 projects that have $20,000 that you need to request, reimbursement on. Which makes timely request for reimbursement very critical. I've had some that I call, especially when you've got somebody that's got a bunch of little projects and they're all doing it. I said, the general fund's like the daddy and everybody else is coming to it for the money until they can get, paid back.
Mr. Chairman, one other question about this. The ones that sales tax money goes into a separate fund. We're not allowed to move any of that money out unless it's.
It's gotta be for approved project.
Exactly. So why I'm asking that, because we might have a lot of money in there right now because all the projects have been completed or something.
And that's not in, that's a totally separate, that's that second column right there on that page.
Cash problems of the restricted monies being used for operations.
Yeah. But just to your point there in the second column there, that capital projects, that's your building fund. That fund balance there of 10,820,000, that is your building projects, with most of that being that capital sales tax money. That's the money that you have that has been collected from the 1% sales tax that's being held to use to pay the debt back, and the money that you've got from the bond that has to be used for the projects. But that money that's why it's there separately. It has to be used on those approved projects or to repay that debt. Now, if there's money left over, I do believe you can approve another project.
We already have alternate projects, I think. They've already decided would be a replacement of whatever.
And what Ms. Alto was talking about was the county uses, for the most part, what's called a pooled cash system. And that's very common. And she's getting away from some of that, but what that basically means is you have one cash system and everything runs through that. In the past, everything was in that, whether it was money that belonged to one of these other entities, except for property taxes. Now, property taxes were always separate, but except, maybe it was something that was owed to, you had money coming in that was collected from the state, because the state monies that come in for the school districts come in to the county treasurer and they have to draw it out. I'm still correct on that, right? I didn't think anything had changed. And a couple of the other organizations. Library, Trinity. And those were in the regular cash. Well, when you had plenty of cash, that wasn't an issue. As your cash got lower, you were using their cash to help support you or when you got in a low cash situation. So when Ms. Alta came on board, she started pulling out that money and set up a restricted cash account so that that money is over there in a separate account so that no longer are you using any cash that maybe a grant that so that when, if it comes up, I need to pay this project. Well, if that $500,000 that you got in for grant money has been used to pay something else, now you can't pay for the grant. So that's why she set up that restricted fund account. But the issue has really came to light and started causing an issue as your cash got lower.
And let's say we put in that fund account, whatever restricted cash. And some interest, do we have an interest bearing account? There might be some extra money generated from sitting there.
All the interest goes into your general fund, but itself pools all of our cash. And interest is deposited in the general fund, unless it is like a sales tax fund that goes directly into that fund.
And the reason I asked that years ago, there was a lawsuit. The county was getting I was on the school board then. County was getting all the money in, keeping it and getting some revenue off of it. And then they would give us our money later. And instead of us, and that was the school board now, I was on the other side. I didn't know if anything had changed as far as if there was any.
I don't think they leave it here long enough to worry about it now, do they?
If it belongs to someone else, it leaves.
I know, that's what it's supposed to be.
We ain't
Said you gonna set you right.
Okay, let's see. Also on that page in the third column there, it says other governmental funds there. You have, that column consists of all your grant funds and it also consists of your debt service fund. You'll see there, third column there toward the bottom, or about middle ways up, you'll see restricted for debt service, $2,473,000. That is funds that has been collected for millage. That is, do you see the line where it says fund equity?
You still on 19, correct?
Yes.
Yeah.
In the middle of the page, at the left-hand side, it says fund equity.
Okay, I got you.
Come down a little bit and you should see where it says restricted for debt service. And then if you go over to the third column, you'll see the $2,473,372.34. That is monies that or millage that has been collected that has to be spent on repaying debt. Once again, that's restricted. Can't be used for anything but repaying debt of the county. So that's why it's over there in that separate fund. And it says it's restricted. Any questions on this page? If not, let's flip to page 74. And first, you have, you've got a finding in, your report this year, and it's actually a material weakness. We've got two. One you had last year, which was, the condition of your financial records. We talked about it last year and we thought it would have been addressed. but the finance person that you hired, it was not addressed. And subsequently that person left. So your records were not in good shape. They were very difficult to audit. They were very difficult for Ms. Alter to step in and try to clean up. There were the invoices trying to locate to audit were difficult to find things. Some things couldn't be located. We can just go ahead and flip to that page while I'm talking about that, and we can come back to,
It was 74.
well, let's flip back to page 68. The very first paragraph there, a lot of that's the same comment you had last year, expanded a little bit. You went on your new system this year, and I guess that contributed to some of the issues with the misclassification. But things were not put in proper categories, not in the proper funds. They may have been a grant fund and they were in the general fund. We were pulling our hair out on some things, trying to just get it straight. I think with the airport fund, we were trying to figure that out, just trying to find out where it was posted, it might have been the general fund, it's construction, it might have been professional services, just figuring out where things were posted. It was, a very difficult task. And so, some of that I think, was just you key in an invoice, maybe this one was posted to this account last time, key it in and just fly on and keep doing what you did last time. But it was very hard to get things adjusted. She had to do a bunch of journal entries to get it so that we could get in to start. And then we had to do a bunch when we got in together to get it where we could. Now, when we get over to this next page for the general fund, you're still going to see some variances in there. They're going to look screwy. And some of it may just be that there's some misclassifications in there just because we couldn't get them all. I know there's one in there that we moved some of them. There's utilities in DSS that I know DSS did not have that many utilities. But then in your utility account, where all the general utilities for the county should be, it's way under budget. So I know there's a bulk that needs to be moved over there. But by that point, we were doing the financial statements and we weren't holding up to do any more journal entries. It's in there, it's just not in the right category. So that's some of the issues we saw there. The other comment that you have, one other comment on that, the balance sheet, there were items that were posted to your balance sheet. When it's a balance sheet item, you're probably, if you're getting a report, which I don't know that you were getting anything last year, which is another issue. And I think Alta's working on getting you something now. But whether it was you or whether it was Tim when he was here, and Ms. Chavis didn't come until February. Yeah, so most of this year she wasn't here for the year we're auditing. She didn't start on this till like February. But most of the time you're looking at a statement of budget expenditures to actual. You don't see you wouldn't know a budget, balance sheet, but there were items that might have been posted to the balance sheet. So like health insurance, it never hit the income statement. So it would make it look like your budget was better than it was until those adjustments were posted. That's the danger of things being misposted. Yeah, you can get it at the end of the year, but it can make you think you're doing a whole lot better all during the year. The next comment on the next page goes kind of along with this. Budget variances not properly addressed. This I wanted to put as a separate comment, not just because of the variances, but there were several items that weren't budgeted. One of them you're already aware of was the library. I mean, that's a big item. That was $600,000. That was paid out, but was not budgeted. And there were a couple other items that weren't budgeted. Yeah. I can't tell you why. I have no idea. It's an Excel spreadsheet. It's done on whether it got wiped out by accident or what. I don't know. It's easy to do. Who knows what happened. All I know is it's not there now. So, and it wasn't caught until Ms. Alter brought it to my attention, y'all's attention. I assume to Tim's attention, everybody. I don't really know, but anyway, that's why that is a separate comment. And then, there again, if you've got a balanced budget, you're looking at this and you're thinking, I'm doing good. But if you got a big item like that, that's not budgeted, but you're spending it, even if everything else is good, that's going to put you in the hole. And, your $500,000 as a deficit this year. If you'd had that, that's just one item that contributed to it. But anyway, I just wanted to address that before we take a look at some of the general funds.
Maybe one question pertaining to that. We used to get a monthly report, financial report. And I don't know what happened years ago. And we stopped getting it. I don't know if it's because of the software or they were going to something different, but just like, I guess the cities, I thought all financial institutions were like ours. There would be a month.
Well, you will be getting something.
I've provided Tim with an income statement and a balance sheet for many, many months. Whether he presented to you or not, I don't know. When I became treasurer, I was no longer a financial officer, and that's the financial officer's job. And unfortunately, the last two have not done their job, and I didn't do it for them.
And you know why I'm asking that? I know somebody's got to know what's going on and where it's going at,
And
whatever the top.
And one comment that we have in the audit every year is inadequate segregation of duties. And part of that is supervisory that you use to get past that or to help alleviate some of that is supervisory review. And one part of that is management, whether it's administration and council, looking at those reports. Because, whether it's, looking at a department and saying, okay, why is this department already over budget? And then just asking somebody a question so that they can dig deeper in it and figure out what's going on, whether it means something needs to be addressed in the budget, does spending need to stop in that department or what? I know you can't just tell them to stop, but
Didn't we go to a different software just for that one reason though? Where we could have monthly?
well, you went on it just because the other one was just so old and it was just very weak.
I never thought.
But you're not on that anymore.
What the reason?
What would be your comment to council if you saw it?
Oh, it's night and day. I mean, what you got is, you can sit there and, I'm not looking through a paper report that's this thick for the year trying to find something. Now I can log on from my desk in Mullins and look up, print what I need, look for, run the reports I need, look at whatever detail I need. And you can get all kinds of reports, that are needed. So, yeah,
Good.
you went from I don't know what you call it, a cheap car to a Cadillac. Okay, on page 74. And I'll tell you something that Ms. Chavis said, when she was looking at something, she said, I don't see brackets. This wasn't on this page, it's on another report. So wherever you see brackets, not a good thing. The first part there, your revenues, and when you see on the next page, up there at the top where it says total revenues, your revenues were favorable by 2.7 million. Now, the biggest reason for that is the very first line on that page, on page 75, your ARP funds. You budgeted to use $626,000 of your ARP funds. You actually used 1.8 million of it. So that's why you have a favorable variance there. I don't know what you budgeted to use, but you ended up buying land. You bought 2 tracts of land.
Mhm. No,
That was the next year. wasn't it?
no, that wasn't that was the next year. This was before that, which was the what track was it?
This was, Atkinson and
Atkinson.
Foster George. You paid the creative consultants invoices for that, for your IT purposes. Paid some of the, Tyler consultant, which was the one for your new program, paid that. And then there was one, retention bonus that was paid. And then you paid for half of the first responder increases in 22-23. And you'll see right down below that with the, under general government, county council and capital outlay, $585,000, with nothing budgeted. That's where you see the land that was purchased, and also some of the, expenditures for the park out here.
Which park are you referring to?
The Fallen Heroes Park. You will see throughout here, under fringe benefits, under every category, you're gonna see a variance, a negative variance. That's not, doesn't mean that everybody went over in that category. When you went on, in the past, you budgeted one line item for health insurance in just one general category. And everything was charged there. You didn't charge it by department. When you went to the new software, you could charge it, it would automatically do it based on payroll or based on the employee. So it was broken out by department. It's still budgeted in that one line item. So you're gonna see one department that's gonna have a big favorable variance and all the other departments are gonna have negative variances. So that's a little misleading in each department. And you're gonna see other areas where these things, especially for the ARP, if some of that was funded, like where the Tyler invoices were charged or where creative consultants, probably in IT, were paid, you're gonna see negative variances there, but you've got revenue up here in the revenue section to pay for that. And finally, on page 83. In the middle of the page, right above where it says total appropriations, you'll see there the HTC broadband, $747,000 with no budget. That was also funded by the ARP fund. So that's why you see a negative there. That was another big item that was part of the that ARP favorable variance. You'll also see down near the bottom, transfer to component units. That's the portion of, that's the library, what was paid to them and what was funded to the museum. And as you'll see there, there's $48,000 budgeted. That's the museum, but there was $738,000 paid out. So that's what I mentioned with the library not being budgeted. When you take all this into account, you had a deficiency for the year of $510,241.54. Any questions on anything in the general fund? Okay, if not, I'd like to touch on the management letter, which is the letter that you were emailed. And I'm just flipping over to the second page. The first two comments on the material weaknesses we've already talked about. The significant deficiencies we've talked about several years. Bank reconciliations, we've talked about that for the fiduciary agents. Centralized grant monitoring. That's also a repeat comment, but you have put in some procedures in place to notify, and I'm at the bottom of the page. On that second page, they have put some procedures in place to notify your grant coordinator whenever a grant is obtained by the county, so that she can be aware of when something's going on as pertaining to grants. My concern with not having someone overseeing it when you're having other entities, other departments doing these grants, as far as doing the paperwork, filing the claims for reimbursement, is that when they're not done timely, you're not getting your money back quickly, or you miss a deadline and don't get your money. So just want that oversight in there, especially with somebody who's familiar with the grant process. Next page. Reporting to management. That's what we were just talking about. Having counsel. I'm on the one you got emailed on the last page. The first one says disbursement procedures. Reporting, the second one there, reporting to management. We talked about that, having council get their reports so that they can be a part of the process to monitor it. And timely deposits, we've talked about that in the past. I will say that that was better this year. It was not as widespread as it has been in the past. So hopefully next year that comment will be gone, is my hope. Last item, funds not deposited. You had a department, business licenses and permits. I usually get a report that lists all their transactions for the year that's generated from their system. And I reconcile that to what's reported with your countywide system with what the treasurer reports as revenue and what's been deposited through the treasurer. When I first tried that, I couldn't reconcile it. So then when I couldn't do that and I wasn't sure with the new program, I said, okay, maybe there's an issue with that. So I took their daily receipts and I matched everything up. I got this receipt, I matched John Doe's receipt to this and Jane Doe's to this and started highlighting everything to figure out and then seeing what I had left. Then when the ones I had left that I didn't match up to a receipt from the treasurer, I sent to the department, said, can you check and see if these people got a business license or a permit? And then tell me what date these were. And he did, and we narrowed it down. And that's when I came back with about $9,000 in receipt for business licenses or transactions or building permits or business licenses that were on the report for the year, but were not on the treasurer's deposits for the year. So they did some research at the treasurer's office, go back through their information to see if they could find where something had gotten posted in the wrong place and they couldn't find anything. Everything appeared fine on their side. So my next step was I said, okay, I'm going on to the next year just to see if this was an isolated incident or if it went farther. So I did the exact same thing, my same procedures in 23-24, and I came up with another difference. So I did the same thing, narrowed it down to these dates or to certain items. And the department head did find a couple of deposits that had gotten filed in a client's file folder by mistake, where they had been sent back to his office because they didn't have the proper breakdown on it that told the treasurer's office, post this to building license, business licenses and permits. So they sent it back to him saying, we need a breakdown. Well, whatever reason, it ended up in some files and got put in a file cabinet. So they are undertaking the process of going back through their office to see if they can find anything else. They have also taken steps they collect the money, they balance it daily to their report. They get a report saying, I got this much in business license, this much in permits, and the numbers. And that's taken to the treasurer's office. And then they get a receipt back from the treasurer. Well, the first day or the first year when I did this, they gave me the reports back, their copy of the report that they would give to the treasurer. It just didn't have the copy that would come back from the treasurer's office, which seemed odd to me that they would still have that. But so I didn't really understand why, and I still don't know why, but so they're in the process now. I don't know if they've found anything else. Has he said anything to you?
No, that I haven't, he hadn't said that he's found any more.
How much you were missing?
Yeah. How much was it? I missed-
It was about $9,000 in the first year and about $7,000 in the second year. But they've added procedures now so that everything, they're doing separate drawers for the two clerks. So if something goes wrong, they can't say, well, you did it. You did it. So they can't point fingers at that. This person's responsible for their drawer and the other one's responsible for their drawer. They're still taking the money over to the treasurer's office. But when they have to report back to the department head. And now he's developed a checklist for each day so that he can check off that he's got a deposit and he's got a receipt from the treasurer. so that he's monitoring what's being done by the clerks.
You can't prove on previous years about the 9,000, 7,000.
It was done by all different people. I mean, it wasn't narrowed down to one person. And you also had that being handled by several different people.
Sure. Now, we're talking about cash or check,
But,
both.
and with the first step, we even, I talked to the building office. Then I went to the treasurer's office to talk to them, to see if they had any ideas and to help me. I had been back through their box to see if I could find the receipts in theirs. That I was, maybe I'd overlooked something. And then I asked them to go back through it, so see if you can find receipts for these days. Because by that time he had said, okay, these people got these licenses on certain days. So they didn't find anything. We talked about what, their processes were for when they get the deposits and so forth. And they got the list of the people that had checks and called them. And the people she talked to, the checks had not cleared. So that was a pretty solid evidence right there that they'd never been deposited. I think the ones in the two that were discovered were in 24. And I believe they were like was it 2,000 or? Yeah, it was $2,000 or $3,000. So would come off of the 7. So they found part of the 24 money. Any questions on that?
Good.
Any questions on anything I've gone over?
Been very thorough. Thank you very much. I wish it would have been better.
Yeah, me too.
If y'all tune in January 1st, 2025,
What we gonna do?
things are gonna be better.
I hope so, because I can't keep my voice for these moments.
Thank you.
Thank you.
Thank you, too, Alan. Appreciate it.
Thank you, lady.
Yeah.
Administrative update.
Thank you, Mr. Chairman, members of council. I just have a few brief updates. Just want to let you know that the landfill is back open, full-time, regular hours. Also, we have started the mosquito spraying. We started Monday and we've sprayed the entire county as of today. The lower end of the county was the last part, but we've sprayed every area. We are gonna spray for the school football games. We're gonna spray them a special spray. And we're also gonna spray the whole county again next week. So just be patient with us, but we are spraying every area in the county. I do want to say that of course, the mosquitoes are greater because we still have standing water in some areas, but we'll make sure we target those areas a little bit more closely. Also, we had a storm damage assessment meeting today. We had some of the cities, some of our fire and rescue chiefs, and we talked about just some measures that we did during this storm and what we could change differently. But overall, it was a good meeting. And we hope to continue to collaborate with our municipalities. As far as that, yes.
Any kind of grant money or anything would be we could get a birth rate from the state?
Not for this storm.
Okay.
We did not meet the damage threshold. we only had a few houses really that were considered damaged, and those particular individuals can get assistance. Of course, we have our local resources, but that's all dependent on state money. And right now, really, we just don't have a lot of the state money. But from a countywide and a federal standpoint, we didn't meet the threshold this year. That's all the updates that I have.
Questions, comments, council members? Go ahead.
Ms. Chavis, the 378 coming into Gresham from Florence Junction area, the welcome sign is faded and bent.
Okay,
Can you get them? It was pretty bad.
the welcome to Marion County.
Yeah.
Okay.
Ms. Chavis, I have one thing, well, actually two things. The park out at Columbus Week, it has been brought to my attention, the picnic area shed is, it's needing some work to it. It's starting to fall in.
Okay.
I hate for anyone to be up under it, something fall on them and it relies back on us for anything.
To that point, we are actually, as a capital sales project, we had county recreation funds available. So we've gone out and assessed all of the parks. So all of them will be getting new benches, new tables, awnings, or, coverings. So that one will be a part.
And it has also come as a request from the mayor of Selma.
Okay.
Could we try to come back out and finish cleaning around the community center, the library?
Yes,
What
sir.
Al them started. They did a wonderful job out there. They just said on the free time that they would go back out and work the rest of the area.
Okay. Yes, sir.
Mr. Turner?
Gentlemen, Councilman Fox. Tyvola Road, they called me the other day, said the ditches need to be cleaned out. We said a bunch of them at Tyvola Road.
Okay, and to that point, I've had a meeting scheduled next week. The senator and I with the state, the South Carolina Office of Resilience. We're going to be doing and talking about, starting the talks about cleaning up the culverts, cleaning up ditches. So we're going to be working with the state. We're really going to go around the whole county, but really focus on the areas that always retain water, always have issues during storms. We're going to focus obviously on those areas first, but eventually try to target everywhere in Marion County. I'm actually working with Willina on a grant that can help assist the cost that it will be to clean those ditches and culverts.
Well, let me be the first to ask them, please put sellers first.
But you said Tyvola Road?
That's full.
Yeah.
Yes, ma'am.
And Charles has already come by the recreation park, because we got a lot of kids out there every day. And I would appreciate it. I don't know about the city of Marion, but I'm gonna request. Because if they find out I'm getting iron sprayed, they're gonna get it.
Oh.
So we want to make sure both recreation centers are sprayed as much as possible.
Okay.
He's in Alaska.
Yeah.
He's in Alaska.
The executive session,
I don't have anything for today.
I'd like to discuss economic development and personnel.
Okay.
So moved. Motion second. All in favor of the motion, signify by saying aye. Aye. Opposed likewise, the ayes have it. Executive session. We went in executive session for a personnel matter and economic development briefing. No action was taken. We need to come out of executive session and go back into our open session.
So moved. Second.
Motion second, any discussion? All in favor of the motion signify by saying aye.
Aye.
Opposed likewise, the ayes have it. We went in executive session, no action was taken. What I hear from council.
I was adjourned.